To keep you updated on the capital and financial markets, here is a recap of what happened.
Inflows into India's small and mid-cap equity mutual funds surged to record highs in April, on the back of resilient earnings and more attractive valuations after a recent correction. Small-cap funds drew 65.62 billion rupees of inflows, while mid-cap funds attracted 68.86 billion rupees, record highs for both categories, according to data from the Association of Mutual Funds in India. Large-cap funds, by contrast, lost some shine, with inflows dropping 15.3% to 25.25 billion rupees, underscoring a sharper hunt for growth and value beyond India's biggest stocks. Indonesian equities plummeted after an index provider removed 6 local companies from the domestic Global Standard Index following a quarterly review and the weakening of the rupiah. MSCI has retained its status for Indonesia in the emerging market category. The index provider also removed 6 stocks from the MSCI Global Standard Index and 13 Indonesian stocks from the MSCI Global Small Cap Index. Major companies such as Arman Mineral International, Barito Renewables Energy, Chandra Asri Pacific and Sumber Alfaria Trijaya were downgraded to Small Cap Index. This review leaves 11 Indonesian stocks in the MSCI Global Standard Index and 43 stocks in the MSCI Global Small Cap Index. The review will be effective from the 1st of June. Moody's Ratings, in its 5th of May report, highlighted Malaysia as one of the several major emerging economics demonstrating robust resilience across key market indicators. The report identified Malaysia, India, Thailand, Indonesia, and Mexico as consistently resilient, noting that increases in credit spreads were limited and short-lived, yield differentials with the US remained moderate, and exchange rate movements were contained. It highlighted Malaysia's ability to maintain market access and absorb shocks without prolonged disruption, the latter primarily through price adjustments rather than financing constraints. Investor confidence has been further supported by policy adjustments and government spending measures during periods of stress. Malaysia's stock market may see investors turn risk-off in the final months of 2026 amid rising expectations of early polls, said UOB Kay Hian. Investors should take profit by the third quarter, the research house said in a note, noting that the benchmark FBM KLCI fell 3.0% to 6.0% in the days leading up to the polling day in 3 out of 4 previous elections, and contracted as much as 16.5% in the aftermath of the polls. Further, investor concerns would focus on the full brunt of the higher for longer inflationary effect from the Iran conflict, which point to possible downgrades to overall consumption and corporate earnings, UOB Kay Hian said. Forget fintech startups or American interlopers. The group that UK banks have had most reason to fear over the past 15 years was a ragtag band of lawyers and claims management companies. The FCA says claims managers can be useful, but it is worried about aggressive marketing, unfair contracts, and a lackadaisical approach to customer data. Observers have been saying similar things for decades now, but while bad behavior is still rife, the market is already less of a Wild West than it was. Some activity has shifted to law firms that are supervised by the Solicitors Regulation Authority, which has also been trying to clamp down on bad behavior in its bailiwick. Even claims managers that survive the various probes face a less favorable environment. The Financial Ombudsman recently started charging professional complainants to discourage them from sending in thousands of low-quality hit and hope submissions. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry. Watch the latest episode of Coffee Talk to find out about what is going on in the industry, exclusively on FIMM's official YouTube channel.
This has been the FIMM TV Weekly Recap. Be informed, stay updated, be sure to like, share and subscribe.